All right, folks, welcome back. This is our Thursday commentary for the ICT Mentorship for December 9th, 2021. All right, so we are seeing the very reason why I typically avoid these weeks every single year and elect to go with just spending time with my family. Around the holidays, there's a lot of prep and things, and if there's ever any doubt as to why I do it, you're seeing it now. Okay, the markets are just held in a range, they're consolidating. That's not to say that it can't create some kind of a crazy volatile end of December, but I'm willing to let that go and focus my time throughout the months and weeks of the year that you've been trained to anticipate me being more active in my analysis. But with that said, let's get into this and take a look at what's going on. I will close the video up with a schedule for the remaining part of this month, so that way everyone knows what's expected in terms of content and what my schedule will be, because it will be obviously augmented for the holiday. All right, so we're looking at the daily chart of the dollar index, and we did not get a close below the rejection block here. Notice that we traded below it, but we didn't close below it. And on this chart here, I have that dealing range high and low annotated, and the failure swing that it failed to make a higher high on. So far, we're still inside that range that was defined by Powell, Fed Chair, speaking a week ago or so. If we break lower, below the dealing range low, this is the last line of defense for the bull market. I would be more concerned about this level being broken to the downside than probably a shift in long-term market structure would be underway at that point. We don't see that yet. Okay, so I wanted to remind you that the closing below this particular candle's closing price, that's the rejection block, inside that swing low. If it closed below that yesterday, which it did not do, that's problematic. We didn't do that. Now today we have a little bit of a pop, which is fine, but it's just dancing around in between. And I'm going to say this, but I don't want you to read too much into it. But to me, these weeks leading into the end of the year and the holidays can create aimless price action. Now, I don't want to say it like noise, and I don't want to say it like it's not being controlled or to that effect. But I want you to think about what you're seeing in absence of right now. Is the market clearly running for a obvious buy side or sell side liquidity pool? No, it is not. Is it running for an obvious imbalance in a premium or a discount? No, it's not. So when we have these conditions like this, is it high probability? Is it something that would invite you, in your present understanding of what you've been learning from me in this mentorship, does this environment make you, or does it entice you or draw you into taking a trade? Because I want you to remind yourself that this is not a high probability condition. We have not left that dealing range. We're still inside of it. Because we're still inside that dealing range, the markets are going to do things that are not characteristic of high probability. That means the market's not expected from an algorithmic stance to deliver with a great deal of precision and narrative. The narrative is unknown. It's unknown to me. It's unknown to you. It's sitting in a range waiting for large funds to either come and liquidate by the year end or reposition for the new year. There's really no incentive right now for any of that to occur. So that's why we're waiting for that dealing range to give way, the dealing range low and the dealing range high. Now, with the exception of the hardcore junkies in here that want to have a trading fix every single day, the sober-minded individuals, doesn't it feel good to know that you know what you're looking for, and until it does it, you're not worried about what the market's doing? You're not concerned about it. There's no real reason for you to waste any time looking at the charts. There's no real reason for you to put your money at risk in your demo or your paper trades. There's no reason to assume any of that, and certainly not for live fund trading. All right, so here is that hourly chart on the dollar index, and you can see it's just meandering around. No clear, obvious pool of liquidity, no imbalance that it'd be obvious that it's reaching for, no one-sidedness. That's the key here, okay? Now, I've taught and lectured on these types of environments throughout the year and throughout the years since I've been doing mentorship. And I always ring in the idea that these are the ones that aren't liked the most. You never get a lot of fanfare in feedback with these types of lessons because everyone wants to give me a good trade setup pattern, a low stop, it's a small stop loss, and a big target. And preferably it's a setup that gives it to me in 5 minutes profit. You're asking for the unreasonable, okay? If there's a time that anything close to that would hardly ever manifest in the marketplace, it's during these times. So it's important for you to appreciate that these are the lessons that promote longevity, because you're not going in and gambling, because this is exactly what this environment is. It's gambling. There's no real advantage for you. Not even with my concepts. There's no advantage right now. So if it's not advantageous for you, and you have no weapons that are going to be formidable with a lot of probability behind you succeeding, why are you going to push your luck, your edge? Okay, this is where you dull your edge. Okay, you want to relax and trust the fact that what you're being taught here is to avoid these conditions where everybody else in retail or just gamblers, they want to be in here because they think they see something and they're being fooled by randomness. We have not left this dealing range here. Everybody in here is fighting a tug of war. Bulls and bears, bulls and bears. And it's done nothing. It's just meandering around with no real high probability of doing one side or the other. I can't realistically outline a bullish side and a bear side and let either one of those be independent and not have a challenging or opposing view. Think about it. That's the definition of low probability, which is the reason why this is your classic December. This is exactly what it looks like. Now, we've had Decembers in the past since I've been doing mentorship where it was a little bit more eventful, and that's going to happen. But I don't care. And you shouldn't either. The memories that you make around this time of the year with your family, year-end, projects that you want to do for the holidays and things, that to me is more important. It may not be for you if you're a young guy in here and you just want to be, I want to trade. This doesn't sound cool to me. This isn't what I imagined trading would be like. Well, this is real world trading. Okay. This is what it's like to be focused on success, not just, well, I'm going to roll the dice. Okay. So I really want you to grab a hold of what I'm suggesting here is that what does it look like when it's low probability? It looks like this. And it doesn't have very clean price runs with nice, obvious liquidity pools or imbalances that would reach for. And it's just so obvious. It's so obvious for you and me, really, to outline and say, this is where it's likely to be going to next. And when it's inside these ranges like that, you have to be a 1-minute scalper. And not all of you are equipped to be that. And frankly, the positions aren't that favorable. They're not even appealing to me. And I can do very well on a 1-minute chart. So I'm kind of like pulling back the curtain a little bit and showing you the wizard and saying, this is an environment I wouldn't touch. I wouldn't do anything with it. Nothing. I wouldn't do anything with it. Right now, the last 2 days, the indices, same thing. the stock indices. They're just doing, weird little runs, and you can't really build a narrative around it. So what do you do in these conditions? You sit back and you wait. You wait for one side of this range to give way and have no team mentality. Oh, I want it to go here, so therefore I'm going to look for trades that line up with that. Because if you do, these environments can break you. I know this from firsthand experience. I have blown real money accounts forcing ideas when it's like this. Now you can choose to not listen to me, and you can blow your demo account, you can frustrate yourself with paper trades, or you can blow your live account trying to do something that I am unable to do myself. Trying to prove a point, trying to be better than the teacher. Or you can listen to me and not get the scars that I have and be better than me in this regard, because I pushed and punished myself through these types of environments before. Lots of losing, lots of monetary loss, lots of regret, depression, just complete disgust. Then I finally said, you know what, I need to focus on what does it look like, so that way once I identify these environments, I'm not going to mess with them. And I'm not going to worry about it. But the problem with that idea is you are here to be trained. And if you're a new student, these are lessons that you don't want to entertain or receive because they feel unproductive. They feel like, no, you're just weak in this area, so therefore we're going to highlight that. No, this is a strength. This is a strength to know where you're likely to fail, because every system, every means of speculation has a weakness. There's always a weak link in something. There's nothing out there that's absolutely, impervious. There's always some kind of weak element. And mine is my exits, obviously. And I can't find a reasonable framework in here or narrative to justify trading in this environment right here. So because of that, I am disarmed. I'm not worrying about providing a commentary for you because this is part of what you're being trained to understand. You pay for this. Whether you realize that this was going to be part of the lessons or not, this is what you actually paid for. You want to be able to learn how not to fail, right? Think about it. If I was marketing, say this was the first mentorship that hasn't happened yet, okay? And I was going to market and I was going to advertise. If I said, who wants to learn how to trade high probability setups that deliver real fast, get you to your profits, and rarely move on your stop? Everybody wants to sign up for that. But if I marketed with, I'm going to teach you how to avoid losing trades and identify exactly how the environments look and when they form and when they're likely to occur, so that way you don't go through long periods of drawdown and probably blow your account. Which one's more appealing? The first, obviously. But this is incorporated in what that first advertisement idea or campaign would be doing, because obviously you've seen, I can teach you how to get in high probability setups. I can teach you how to use relatively small stops and get larger payouts in your setups. I can teach that, and you can see that you've seen me do it. I've outlined big moves. I've outlined short-term moves. You've seen me engage in lower time frames. But in addition to that, you can do exceptionally well all year long and think that you're going to be good in this environment and literally decimate yourself. Don't think you can't? Don't listen to me. Don't listen to my good advice, this strong medicine that's sometimes hard to swallow, but it's good for you. It's good for you to understand this. This makes you a well-rounded trader. It gives you the strongest analytical stance that anyone that speculates would hope to have. And they usually don't identify a necessity for this perspective until they have failed multiple times, blown accounts, and they just, usually it's their last try. They know that they're never going to want to put more money into an account. They're never going to have the wherewithal to try to do it again. They're just making a one last stand. I'm going to try one more time. And they will usually, if they're ever going to succeed, they will have this appreciation for knowing when not to tread in certain market climates. It's important to know this. I'm not doing it just because today. I've already stated, I took your attention to this dealing range now for over a week. We have framed this for days now. It needs to come out of this range. And you don't have to have a preference. It doesn't make you lesser of a trader if it goes lower or if it goes higher. You're not trying to predict that. I'm not trying to predict it. I'm just would rather see the dollar go up to a weekly objective. But if it doesn't do it, I'm not going to be upset. I'm not going to look like a failure to you. I won't feel like a failure. I won't feel like my concepts have failed. My concepts are on hold right now. That's what I'm trying to stress to you. Don't try to force any of my tools right now to provide precision for you, either in your study or your paper trades, until we come out of this range. That's the bottom line. That's the layman's approach to listening to everything I just said, because they probably will not be what you think you see in the chart. I can't make it any plainer than that. Okay, and here's the 15-minute time frame. Again, just drawing higher. These types of moves in here, these are painful if you're on the other side, because this keeps on grinding higher, 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 higher. And it's many times where I was younger and I was trying to force my will in the marketplace, and I would, every single time it would enter something like this, I would fight it because I had an idea that I wanted to see pan out. And you can't do that, folks. You can't. You have to have a limitation of how many trades you do, and you can't force your expectations on the marketplace. You have to wait for it to show you its hand, and it has not shown it yet. It hasn't done it. Don't look at this move from here to here and say, oh, if I would have bought that or sold short foreign currency on that, or look at this run here to here and say, but I missed that move. If I would have just, well, what if you just would have just relaxed and waited for high probability conditions? When you go through a couple years of trading and you go back and look at your journal, and you're going to see where you did really well and how much trading you did that year, you're going to see that you aren't really doing a lot. You're strategizing, you're waiting for really choice conditions to trade in and operate in. And that is a very strong technical analyst. That is a superior trader. Not someone that has a lot of trades. I made a lot of money, but my strike rate's 50%. Well, that's somebody that just manages money well. That's not a good trader. That's basically what Larry Williams was and is, I think, still today. He's a good money manager. He manages risk, pushes it when it's in his favor, and cuts back when he knows it's probably not going to happen. But he trades too big because he has a low strike rate. There's a lot of traders out there that are quote-unquote profitable, and they may be legitimately profitable, but their strike rate is so low, that to me is bothersome. I don't like that. I don't want to be a 50-50 trader. I've spent my entire life looking for environments where the conditions are ripe for me to be one side or the other. And if I can't define that, then I cannot be in the marketplace, because I cannot allow my psyche, the psychology aspects of being in the market, putting on a trade, submitting to what the market's going to do, whether I like it or not. I have to be committed to one side or the other. And I have to be able to frame that and model it in my study of price. If I can't do that, then I am literally gambling. That's why when I talk to you with this tone. I talk to you with these ideas so that way you can latch onto them and make them your own persona, your own view, your own approach, and let that be part of your trading personality. You all have a personality that you bring to the marketplace, but you develop a personality with the model and or the things that you use when you're trading. If you don't, you're going to be aimless. You're just going to be out there like a sailboat without a rudder, wherever the wind takes you, and you probably aren't going to like the destination. This way, you have control. You don't have to just submit to being in the market because you want to be in the market, or other people say they're in the market and then you get lucky with something. This is not an environment that equates to someone that's skillful. The real skillful individuals are sitting on their hands and they're waiting for high probability conditions. Eurodollar daily chart. All right, so we have the market trading up into the rejection block here. On this chart, we have a close relative to this candle here, but I'm going to show you something about the close on the lower time frame. So we have the close above the rejection block here, but we have this retracement back down into the order block there. So we're still back inside the range from the high and the low, so that dealing range. We had the initial drop down out of it that we didn't see the higher high on dollar to reflect that. So there's SMT divergence. So they took stops here and then ran it to the other side of the rejection block. And then we're back down inside the range again from yesterday's high to the order block here. So again, we're back in that. We don't know. I don't know if it's going to go higher or lower. I have nothing in here that gives me a great deal of confidence one way or the other, period. All right, so here's the hourly chart. Dealing range high, dealing range low. We came out of it there, accumulated and rallied. Rejection block is what's being seen here. But I want to show you on the 15-minute time frame that here is New York midnight for today. So when we started a new day, yes, we were over top of it here. But when we started a new day here, were we closing above that level? No. The close you're seeing on that daily chart is based on like Wellington time in New Zealand. So I'm not interested in that. You learn that from other people. Okay, they think that's an important time of day. It's not an important time of day. The algorithm operates on midnight time in New York. Whether other traders, other educators, other people, other quote-unquote algorithmic traders suggest anything otherwise, it doesn't make them right, and it doesn't make me wrong. It is what it is. It's midnight New York time. That's where the rollover is for the new day. It's not Wellington and New Zealand. It's none of that. So when we look at the daily premium rejection block in here, it's not technically closing above it. And that's why you get this. It drops down back into the imbalance that's seen here. Discount low. Body's respecting that beautifully. And frankly, I don't know what it's going to do. Remember, we're still in that it can go either way. So if it can go either way, is my probabilities of being a buyer or seller strong? No. That's the secret to making me consistent. That's why I can be more right than I'm wrong in the commentaries. I identify these conditions. I'm honest with you. That way I'm teaching you. So that way you can identify them yourself. You're not going to rely on me because there's going to be a time, God forbid, I lose my mental faculties or something untimely happens to me. God forbid. Anything can happen, and you want to be able to have these skills under your belt. So that way you can rely on you and trust your ability. And the way I do it is how I'm teaching it. And these are the very boring lessons. And I know they are boring, but these are the ones that keep you in this business. These are the lessons that if you ignore them, they will remove you from this business. Pound dollar daily chart. Okay. Yesterday we dug in a little bit deeper, as I mentioned, and it really hasn't done much at all except for come off its lows formed on yesterday. So here's the sell side liquidity pool mentioned a few days ago. We wiped that out, came up rebalanced, and hasn't really come back down in to take out this low. So it's just sideways consolidation, nothing really going on. And the 15-minute time frame pound dollar. Look at that. And yes, we traded down this small little fair value gap, and we had a little pop up into here. But are you trying to trade that? Because it would be, in my mind, something that you're just trying to force. And while this can be seen after the fact, filling in order block, runs up, takes buy side. Maybe some of you have taken that trade. It's not something I would have done. And I'm not trying to remove the good feeling that you may have had if you've taken it. No one's reported it to me, but I get a lot of emails. So it could be in my inbox. I don't know. But I don't want any of you to look at this. Like, look at this. This is back and forth, just moving around. And I'm not suggesting at all or diminishing the possibility of a 1 minute chart setup and getting 10 pips. Sure, that can occur. But I want you to look at where we're at in this range here. Okay? From 31.85 to 31.95. That's your range here. That's 10 pips. Are you willing to do any kind of trade, even with a 1 minute chart, trying to capture 10 pips in that when you really can't effectively define risk that would otherwise be easy to do in high probability conditions? I humbly submit that I would not be doing it. I'm very good. Just let me speak a little bit here. I believe I'm above average in reading price, picking entries, and knowing where the market's likely to go. I would not be confident, knowing what I know and what I'm able to do, I would not be confident trading British pound, because it doesn't have anything going for me that gives me the inside advantage that I teach you. It's not there, okay? So, again, this is one of those videos where it's not liked. It's not one of those favorite ones. But I want you in your notes, in your study journal, to write down this video's date, okay? And I want you to refer to this video when you enter a market condition that maybe you didn't see it as sloppy or low probability, but every trade you get into feels like it's going against you immediately or doesn't move, just stays real close to your entry and drives you nuts. I want you to come back to this video and listen to it. As dry and as boring as it is, I want you to listen to this video. Okay, because chances are you're going to be in this condition again in the future without me. You're going to get yourself into a situation you're not going to believe what I've been teaching you in this one and other lessons throughout the years in this mentorship, where I talk about environments that are low probability. What do they look like? So that way you know what they look like. How do they form? Why are they forming? How long will they last? That's an unknown. I don't know that. That's why you have to submit to time. You have to submit to what the market's going to do, because the algorithm is going to do what it's going to do, or they're going to manually intervene and reprice outside the range. And that will create new interest, because right now there's none. Who's in a hurry to make new positions right now before the close of the year? Think. Everybody on Instagram is. Everybody on Facebook, Twitter, YouTube, because they all feel like that's what real traders are doing. Real traders right now are squaring positions, reducing risk, and waiting to see the new year begin. Because then they have a whole calendar year in front of them to manage risk. If they made money this year, are they trying to risk losing it? No. Some funds have performance bonuses if they've done a certain threshold of return. Why would they gamble that away right now in the last few weeks of the year? Would you? Think about it. Say you've operated a funded account and you've done really, really well for this particular month. Do you want to go in there and say, well, I got 20%, 30%, on the books. I got a couple more weeks left in December. Let me just try to really yoke it up a little bit more. If you think like that, you have not been learning properly here. You've not listened. You're looking for weapons so you can go out there and do mass destruction, and the only recipient of that is going to be yourself. You have to be sober-minded. You have to be in control of yourself, and you have to know when not to move. Be silent and be still and wait for the market to show you its weakness. It'll show you its hand. It will always do that. But you have to learn to wait for it. And that gives you peace of mind. It conquers fear of missing out. Fear of missing out. This is how you master that. By understanding when it's likely not to do what you imagine and hope that it would if you were trading. If you get in these markets watch like this, it becomes a religious trade. You'll start hoping and praying. And as soon as you do that, the best recourse is just get out of it. Even if it's a small loss, get out. Because you've literally let go of the wheel and you're no longer in control of yourself. You're just hoping that the market's going to do something that you've lost sight of. The original idea for you getting in a trade, you've abandoned it. Because now you're praying to whomever your God is, or the universe, because some of you in here, like to say the universe lined up for this to happen for me or that. Whatever. But you are asking something outside of yourself to deliver something that probably isn't going to happen. Are you in control? No. You have to be responsible. You have to be responsible with your decision-making skills and when and how you're going to engage. And the easiest way to stay in this business is to know when you're going to be walking into a landmine field. I'm teaching you how to see the signs. It's not obvious to a retail trader. And you don't ever see people teaching this. Period. There's no books out there teaching this. No other educator out there, not one. And I've literally spent thousands of dollars listening to other people, not because I want to learn how they enter a trade or how they put their stop loss here or that or their money management. I could care less about that. I'm only interested in how they manage low probability. And not one course, not one educator, not one guru, not one of them teach this. And I'm not afraid to tell you, I already know it's boring. But I also know this is the secret sauce that you're looking for. Because I already have tools and tricks and weapons of mass destruction that will literally destroy the markets when they're one-sided. And you will be on the right side. But how do you keep yourself from self-destructing? Understanding these lessons. This is what's important. Because it's not a matter of how many trades you can win. It's how much equity you hold on to at the end of the year. You're going to have losing trades. But don't you really want to know when you're getting ready to wipe out and everything you try is likely to fail? Like, how is that not important? Nobody's complaining to me. Okay? No one's saying I don't like these lessons. No one, but I know because I was just like you. I wanted all the magic trick. I wanted all the sleight of hand wizardry that takes place when you put on a trade. What's the secrets behind it? Why is it going to deliver? What makes it precision? That's great. I'm teaching you that, and I've taught lots of it. If I've never taught anything more about those things, you have enough of that. But you don't have enough of this. This is mentorship. This is real experience. This is almost 3 decades of experience. When losing real money hurts bad. I've endured this business longer than anybody else that I know of doing it wrong. I learned from those mistakes. And I channel that into these types of lessons. And they are gold mines. They're just not wrapped in gold. I'm pulling it back. I'm stripping it all down. I'm revealing the bare essentials to identifying what makes these conditions unfavorable, despite the little wiggles and waggles that you see on the chart. Because you're going to fool yourself by that randomness. This is when the algorithm is just marking time. It's not doing anything that's setting up a big move. It's not signaling anything to interbank traders. They're watching what I'm telling you to watch. Think about it. Why am I taking your attention to that dealing range? Because that's what they're doing. And notice what's going on? Hardly anything. Why? Because no money is being put at risk. Isn't that obvious? How can you, and I'm assuming, and I'm taking a great deal of liberty by talking like this because, again, no one's complaining when I do these lessons. But no one in charter says these lessons are strong meat. Like these are meat and potatoes type of lesson. Everyone in here wants to sugar rush where, we call a move, the market allows you to get in and it runs rampant. They're fun. Yeah, I'm not going to deny that. But you can't live on sugar. You get sugar high and then you crash because you're expecting those same delivery in these environments. And when it doesn't happen, what changes in your mind? Oh my gosh, I lost money. I got to get it back right now. I can't have an account sit in withdrawdown in 24 hours or a week. Man, what would I tell my spouse if they ask me how you doing and I'm in drawdown for a week? I got to get back right now. What if I go to work and my coworkers say, hey, you told me 2 weeks ago you did really good in that trade. What have you been doing now? And I'm in drawdown. I got to lie? Or what do I tell them? You see, you start worrying about stupid things. That loss doesn't need to be repaid or fixed right now. When you fall victim in this environment like this, you sit still because you know, or you should know by me teaching you, that they are temporary. And you wait for what I'm teaching you to occur. Once these ranges break, then it will attract more money, real money, not your retail account, not everybody's retail account. It's the large funds. That's what they're waiting for. There's no interest by the large funds right now. They're sitting still. You can't make a move. Indicators and gimmicks that you add to the chart is not making them put their money in the marketplace, which is what's going to inspire either manual intervention or you wait for the algorithm to reprice. And once it comes out of the range, again, then large funds will be inspired. Right now, it's just a wait and see. And you have to be content with that. Don't feel upset about not knowing what it's doing right now. That's not weakness. That's not confusion. That's not a weak system or concepts that don't work. That's what somebody in here that came in the 2021 group might think foolishly, thinking, oh, well, he should know, or these concepts should be working all the time because he says every day, every week, and it won't stop. Right. Every week, every day, and it won't stop when there's high probability conditions. Not every single day is a trading day. Day traders are not everyday traders. They are gamblers if they do that. Day traders know when to go in and speculate and assume risk when it's one-sided. It's not one-sided. So in one hand, you have a perspective that could say, all right, it's an environment where I don't want to be trading, so it's easy and you don't need to say anything more. I got it. Good. And then you have, all right, I understand what you're saying, and now I understand what it looks like and why it forms, and I feel good about it, versus someone that says, okay, it's a pause on trading, versus someone that says, wow, this really gives me perspective that I really hadn't considered. But because I'm seeing it, I'm seeing how lethargic the market is right now, and it's been defined beforehand that it's going to be like this until that range breaks. That's understanding. That's wisdom. That's real experience. That's something that you do not get out of a Cracker Jack box. You don't get it on the bookshelves over at Barnes & Noble, and you're not finding it on Instagram gurus. I'm surprised that someone like Larry Williams, and I'm not trying to beat the guy up because, he holds a dear place in my heart, even though I think most of the things he does now shouldn't be messed with. But I'm surprised that in his long tenure as an educator and real trader, that he never discussed topics like this. He's got more experience than I do. lost more money, I'm sure, doing silly things. So that would be a book I would love for him to write. He's getting up in age. I would love for him to sit down and pen that and say, these are the painful lessons I learned. I would buy that book immediately, because that's a book that is impactful. That's something you can relate to. Everybody wants to put a book out there that has the secret recipe to winning, and they want to dress it up with indicators and techniques and tips. But nobody wants to come and listen to someone that has lost fortunes and tried to do things in conditions that were impossible, and then say, this is what I learned to avoid that in the future. Nobody wants to subscribe to that in the beginning because it's not sexy. It's not shiny. It's not Gucci. But this is what survival requires. Because you can have all the finest weapons, all the coolest techniques of getting in and 2-pip stop losses, and you can have your ass handed to you real easy in this environment. Over and over and over again. And if you don't know why it's happening or how to avoid it or control yourself, you blow your account. You have no idea how many people I've seen over almost 30 years now, where people I've trained or other people I've watched that do amazing trading, amazing, and then they fall into this trap right here where it's not likely to deliver. And as many times as me or their own conscience probably tells them to stop, they don't listen and they blow up. Who's the cause for that? They are. But they're going to fault something outside of themselves. And that's somebody that's going to repeat that same problem. It's going to happen multiple times until they either quit trading or they finally get it. And most people don't finally get it. They finally give up. And this is why I teach that you have to be here for a year. It's not to get your 12 months payments. I could care less about that. It's to show you that these periods exist. How do you navigate in them? What do they look like? What characteristics do they show? What do you wait for? So that way you're not fearing missing out on any move. Isn't that more control that you've been given over yourself and your psychology of the marketplace? That should be empowering, not boring. It should be like, well, I understand this. I'm not taking any chances in this environment because it doesn't make sense to do so. Doesn't that make sense? Now imagine me teaching this in the beginning of the mentorship. You would have never went to month 2. Because you wouldn't fully appreciate it, because you haven't seen the sweet spots in the marketplace that happen in the year, and then you get these dry periods. Haven't I already told you multiple times, even in my free lessons, that I don't trade during this time of the year? Why? Because these are the conditions that usually come in. So I've learned that over almost 30 years. I've learned that this is just better for me to be a family man. Enjoy the holidays. Let everyone else out there, if they're in front of their charts and it creates an opportunity and they're able to make money out of it, God bless them. But I'd rather do other things. I know what I'm looking for when we go into 2022. I know we're going to have nice moves. I know when they're likely to form. You know when they're likely to form. You have the seasonal tendencies. All of you have gotten to that far in the mentorship now. You have the seasonal tendencies that I look for. They don't change each year, folks. That's power. That is a formidable weapon. It's a roadmap. And here's the wonderful thing. If you see one of those seasonal tendencies failing, man, that is really strong. If you have a seasonal tendency that has the 15 and 40-year lines that suggest that they should be seeing a really strong move higher or lower, and price is doing something against that aggressively, that is an enormous, big opportunity. Like a billboard sign. Look at me. I'm going to be doing something that's not expected. And if they're not following their seasonal tendency, that means there's something really going on. And that's usually going to be a mega trade. See how I did that? Just slipped that right on in the boring lesson when everybody else probably turned this video off. I always do it like this. It's nothing new. But the folks that really want to chew on it, they get those gems. Not the guys that just want to come in and watch 5 minutes. You're boring me, man, dude. Get to the real good stuff. You talk for an hour to give that one little bit of a thing. Those people will never, ever succeed. They will never succeed at trading. They will never find the real understanding of what it is I'm teaching, because they want the magic trick explained to them. And they think by me explaining the magic trick to them, that sleight of hand is transferable just by watching one video. Nope. Takes a lot. Takes a lot of time. You got to digest a lot of things, and you got to get out of your own way. Hopefully this has been insightful. Until I talk to you tomorrow, be safe.